Hey, everybody.
Hi, Joe. I'll pass it over to you to kick off. Maybe we'll just give a couple minutes for people to sign on. So 2 minutes, and then we'll pass it over to Joe for the intro.
Okay, and guys, I had this on my calendar for the 20th.
Oh,
I just,
oh,
it just popped up today. So I'm
oh,
glad I looked. But,
good. All
the,
good.
yeah, the note that Laura sent me the other day said the 20th, but that's fine.
All right,
Uh,
cool.
uh,
All right. It
Connor,
looks
what's
like,
your title?
Director of Lending.
All right. Well, let's do it.
great. All right, Joe, you can kick it off.
Good afternoon, everybody, and welcome to the webinar, to our webinar on cash flow. My name is Joseph Gray. I'm the Senior Director for Entrepreneurship and Community Development, and I'm really excited to be a part of this webinar, and I hope you are too. We've got um, a pretty uh, 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 exciting agenda for the webinar. The Director of Lending, Connor McCarthy, I'm sorry, Con, will review with you some important information about how to maintain solid cash flow in your business and what that means. Before Connor starts, though, let me tell you a little bit about us for those that don't know. Grow America has been around now for around 54 years, working with communities across the country. We've been involved in small business lending for over 30 years. A few years ago, we launched our uh, uh, community investment loan fund to expand our efforts to work with uh, with small businesses. Prior to that, we'd been involved with uh, SBA 7A lending for uh, around 25 years. And we're also one of the nation's leading training organizations in the area of affordable housing and community development. And we are involved with providing technical assistance to municipalities and nonprofits uh, across the country on issues related to community development training and uh, community capacity building. So again, today the webinar should last around 40 to 45 minutes. We're going to try to cover uh, basic issues about business cash flow and financial management. We're going to allow for questions at the end of the webinar. So if you have questions, go ahead and put them in the chat. I'll be monitoring the chat and we'll try to answer everybody's questions uh, at the end. So for now, I'll turn it over to Connor.
Thank you, Joe. I'm really excited about today's webinar. A few housekeeping things. I'm going to share the webinar very shortly, and thereafter we'll get started. And as Joe was describing, we're going to have some Q&A to follow. So really looking forward to getting into a critical theme today. I will share right now the presentation, and then I'm going to go into presenter mode. Thank you all for joining today's webinar. We're going to dive right into it. This presentation today is aptly called 6 Critical Signs of Cash Flow Challenges, and then more importantly, how to find them, and then we're always solutions oriented, so how to fix them. Just as a quick primer, let's go over the agenda, and it's relatively straightforward. First and foremost, we're going to define what cash flow is, and thereafter we'll identify signs of cash flow problems. And from there, we'll talk about quick fixes. And finally, after those quick fixes, we're going to discuss some longer term solutions and strategies for successful cash flow management. So as promised, we needed a cash flow definition. That is, what is cash flow? Well, it's twofold. Cash flow is the issues that might arise when a business expenses exceed its incoming revenue during a specific period, or when revenues are adequate but cash runs low while awaiting client or customer payments. Likewise, as we seek to understand cash flow, it's also critical that we understand and prepare for financial patterns that are inherent in cash flow as an important step in building a successful and a resilient business. So we're going to unpack that a little bit more, but cash flow problems are common. They arise constantly and consistently for business owners, and there's some key indicators that you all can look for as you're thinking, hey, is this a problem that's impacting me currently? And then, like I said at the beginning of this presentation, we're going to get into what some of those immediate solutions are, and then what some of the long-term fixes could be. So from the slides moving forward, we're going to identify, as I just said, and as the name of the webinar describes, the critical signs of cash flow challenges. Sign 1, you're missing payments or using credit cards to pay for things on a recurring basis. When we think of this one, think specifically as follows. First, you're having trouble paying vendors or meeting utility payments, or you're ignoring some of those payments altogether. Secondly, as I said prior, you're using credit cards to pay bills, and those bills should otherwise be paid from cash on hand, but for whatever reason, you're using some credit cards to make those payments. So that is the first indication of trouble. The second indication is that the seasonal ups and downs inherent in businesses suddenly catch you off guard. That is, your business has cycles, but generally you'll have cash on hand to accommodate slow periods, and more importantly, cash on hand to ramp up as a business picks up again to cover all of those ins and outs, those ebbs and flows. But again, you might be using credit cards rather than cash or the adequate working capital needed to meet those demands. So you're servicing a immediate cash flow issue with the wrong source of funds. That is, you might be using credit cards when you really should have the cash on hand to make those payments. Sign 3, well, sales are up, but profitability, it's down. Specifically, the sales that you're taking in are not leading to more cash on hand or to more profit. That's a clear indication that not all sales are good sales and that something is off with your pricing strategy. So again, a lot of times I interact in my day-to-day as director of lending with businesses, and everybody likes sales, but not all sales are good sales. So again, sales are up, but profitability is down. That's sign number 3. Sign number 4, here it is. You've lost track of business expenses, and they're continuing to grow. Especially as businesses grow, they can lose track of expenses. And again, this gets back to the indication that we were talking about just a minute ago, in that you're chasing sales, you're trying to throw resources at a growing business. And as you place continuous resources on various projects, you might not be overly mindful of what those expenses are. That is, you're not sufficiently budgeting for every dollar in and every dollar out. So that's sign number 4. Sign number 5, sales are up, but there's limited cash in the bank. This is similar to sign number 3, but when we think of this issue, let us think too of accounts receivable, which is a balance sheet item, but nonetheless, very specifically, when we think about accounts receivable, we need to be mindful of how long it is taking for your customers to pay you. And if customers are taking longer to pay you than is necessary, then you are in essence becoming their bank. And that is, you are lending your hard-earned dollars to your customers, and that in turn is constraining your cash flow. Sign number 6, you're mixing up business and personal, and you can no longer tell the difference. We all do it. But really, personal expenses might be weighing down the overall potential profitability of the business, and you have to differentiate the two and be disciplined to budget for personal expenses and then to clearly define business expenses and to only invoice and utilize your business software for those purposes. So we promised that we would define what those immediate issues are, and we also need to talk about what the quick fixes could be as we think about the fact that cash flow can be an immediate problem, and then over time, we hope to return to positive cash flow and then to grow again. Strategy number 1, talk with an existing lender before you run into trouble with some of your long-term liabilities. If you have cash flow constraints, and this is something that we constantly encounter in our work at Grow America, specifically within our lending division, you might be running into trouble because of that cash flow with a longer-term liability, a note to a lender that you took out or a loan that you took out, and you're struggling to make payment. The worst thing you can do when that's happening is to just miss the payment. Oftentimes, especially if justified, your lender is going to work with you to offer a period of deferment if that's needed, or they can give you additional time or an interest only or some sort of accommodation so that you have some time with a lowered payment or no payment at all to catch back up. The worst thing you can do is, if you're having a cash flow problem, say nothing. Miss a payment and then have to deal with the problem after the fact. Again, I just want to emphasize and pause on that. That could be the worst thing possibly that you could do with regards to a lending relationship. Again, reach out first to what's commonly called a portfolio or servicing department and ask for some assistance. You might be surprised to find out what you learn and how much help they can give. Again, the worst thing you can do with regards to this strategy is to not communicate at all. Strategy number 2, meet with an accountant right away. Lenders are important, running your business is important, but having a good accountant is probably equally important, if not in some respects, most important of some of these strategies. Ask a professional for some help. And specifically, when we think of an accountant, ask that accountant for some help with your numbers. They deal with numbers daily. That's what they're good at. You might be great at running your business. You might not be great at compiling your books. That's okay. Ask for some assistance from an accountant. And once more, as they develop a relationship with you, they'll be able to help you with your immediate issue with regards to bookkeeping and to cash flow and cash flow management. But more importantly, and this is just a cliffhanger of what's to come, they'll be able to start to think with you about long-term goals. That could be about margins. That could be about sales. It could be about a host of other things with regards to your profit and loss statements or your balance sheets or really the performance of your business. But wouldn't that be wonderful? You could start thinking longer term in addition to this immediate cash flow strategy that we're placing before you right here. Strategy number 3, seek to modify payments with your vendors. This gets back to what we were talking about just a moment ago with lenders. Vendors will want to keep you as a customer, and the same strategy with lenders applies. If you communicate, vendors will stretch with you. But the key here is you have to reach out to them and you have to communicate them. Again, exactly like the lender. That is, you need to say, hey, this is what's going on. Here's when I can pay you. This is how I can pay you and how much I can pay you. And again, you might be surprised to find out that vendors, especially if they have a relationship with you, they want to work with you and they want to be able to see you succeed as well too. They don't want to lose you as a customer. So again, if you can reach out early and say, here's what's going on, here's when I can pay you, maybe I can give you a partial payment, not the entire payment. That's going to be a huge strategy to help you get immediate relief with regards to some of your cash flow problems. Separate your personal and your business expenses. If you haven't already opened a separate business account, do this right away. When a business is starting out, oftentimes that can mean that you're starting out exactly with your personal account, and then you're really growing from there. As you grow and as you become more sophisticated, you're going to take on additional responsibilities and you need to differentiate business from personal. It seems obvious, but again, so much is going on as a business owner that it can be hard to remember this. It can be hard to remember to differentiate personal expenses in one personal account and business expenses in another. Just by having two separate accounts, you might be able to differentiate the two and better budget what is personal and then what is a business expense. Strategy number 5, in keeping with expenses, start thinking about what could be reduced or what could be eliminated on the business side. Examples could be switching from expensive print ads to digital ones, and likewise utilizing email campaigns that could help you achieve or surpass your long-term marketing goals, as opposed to going out to every client in person and incurring an immense amount of travel expense to do that. You want to economize, you're going to look through and line item all of the respective expenses that you're incurring on your profit and loss. And while we want to keep this different than the personal expenses, think of it very much in some respects as maintaining a household budget, but in this case, the household budget of your business. Go through, economize, ask yourself the tough questions. Do you really need that person on a part-time basis or a full-time basis? Do you really need that type of insurance? Do you really need to rent from that space when you could potentially have a shared space, et cetera, et cetera? These are the types of tough decisions that if you add them up little by little, singles and doubles can turn into home runs. But the only way you're going to get to those home runs is by economizing, looking through, and managing expenses as if, again, this was the difference between making sure that you had a properly managed household budget and similarly, in this case, a properly managed business budget. Strategy number 6, look for quick ways to generate revenue. And I'm mindful, I realize this could sound a little bit different because wasn't one of the earlier strategies a strategy in which we said to you, not all sales are good sales. And certainly that applies. You don't want to be just chasing sales when expenses and the margins in your business aren't keeping pace. But this is a little different. Let's say that you're a seasonal business that stocks up inventory for the holiday season, and you have a lot of inventory on hand post-holiday season. You could figure out a way to not let this inventory grow stale and to turn it into cash. Maybe you offer a bulk sale or you offer some sort of discount or promotion. Again, you're holding on to the inventory, so it's best not to let it go stale. Best not to let it sit there since you've already incurred the expense of that inventory. Maybe there's a lesson learned in the long term about the type of inventory that you purchased. But in the immediate, as a core strategy, this is one of those things that you can do to generate sales, to not hold on to stale inventory. I want to be very mindful. This is different than what we were talking about earlier in the presentation. Earlier in the presentation, we were talking about just chasing all sales. This is a different strategy. This is when you might have already had something happen. You stocked up some inventory in this case for a busy holiday season. It's on hand, and now it needs somewhere to go. Discount it, get it moving, bring that inventory back onto your profit and loss statement and from your balance sheet so that it turns into actual sales that will trickle down into profitability on your profit and loss statement. So we've discussed some of the quick fixes we can utilize to solve our cash flow problems. And that's just, let's say, if there was a house on fire and we needed to go and get a hose to put it out. But after we settle the fire, then what we're going to be thinking about is how we're going to rebuild and how we're going to rebuild over the long term and what those strategies might look like so we don't get ourselves into this same pickle again. And that's what the core of the remainder of this presentation is going to focus on. It's going to focus on some long-term strategies that you can use so you don't get yourself into this situation again. Again, we gave you 6 immediate things that you can use, and I think they're all wonderful and they're good. But if you kept using those 6 things without long-term fixes, you might end up right where you started again. And we at Grow America don't want that for you. So we need to start thinking about what long-term strategies for successful cash flow management could look like. And they include as follows. Strategy number 1, start to think about keeping a cash reserve. Maybe you start small. I know that seems crazy, especially when you're thinking about the fact that you had a cash flow problem. But if you start thinking about this and being mindful, again, singles and doubles lead to home runs. If you build up a cash flow reserve by the week, by the day, you might be surprised as you start to manage expenses and as some of that profitability leads to additional savings within your business checking account, how much builds up and how much you could utilize to be in a healthier financial position. What's the genius of this? If you build up a couple months of cash reserve on your business balance sheet or really in your business checking account, small expenses or incidental or emergency expenses, no big deal. You're just writing the check or you're wiring the funds and you're not really thinking about it. It doesn't become a fire drill, in keeping with the metaphor that we were using before. You're able to put that fire out, you're able to send a check quickly, you have a cash reserve, and you're able to start thinking about longer term strategic issues within your business that you can address immediately to lead to additional growth. And that's really what this is about, taking care of immediate issues, coming up with long-term strategies so that there's future growth. Strategy number 2, regularly review on a long-term basis your business's financials for runway expenses. You might want to create and use realistic financial projections. And realistic financial projections will get you into the habit over the course of months or really years to start to really project out what all of your expenses are associated with the respective sales that you're booking. But let's break that down into more approachable terms. Sales equals clients or products that you're producing. You know there's expenses associated with them. You need a set of financial projections to really have a good plan on a month-to-month and really on an annual basis to approach your business. At Grow America, we recommend that you have a financial projection for 2 years, and that again, you have a month-to-month breakdown, especially in that first year, because that can allow you to start to understand budget versus actual. Nothing is ever set in stone. We realize there's the real world and that often projections can change. But this exercise, even as imperfect as it is, it's like when you write something down, you own it. So in this case, you're putting down your numbers, you're writing down your numbers. Own those numbers. Start to understand the what and why of your business. Start to understand some of the mechanics associated with acquiring a customer or with building a product. Again, many of us in that business space, we understand implicitly what it takes to build a business, but explicitly, we might be over-expensing something. We might be agreeing to something that's costing us money. By putting together a set of financial projections, you're going to have down to the dollar what's going to happen with that sale, with that product, or with that service. Again, some things might change, but then at least you can start to calibrate and start to finely tune what's happening, why, and why it might not happen again, especially if you can see in real time what's going on. Strategy number 3, calculate your business's operating cycle. And an OpEx cycle is a calculation that utilizes the following. It uses the number of days receivable plus the number of days inventory less the days payable, and really helps you to calculate how long it takes for you to turn and then in turn generate cash. It really assists you so that you, as a business owner, can best understand what the time horizon from initial booking of a sale to realization of the cash from the sale onto your balance sheet really will look like and how that money will flow onto your business checking account. It's a cycle. That is, when you incur a client or you incur a service, you then have to invoice it. You're waiting to get paid. And then in turn, there's a cost associated with that inventory. You have to pay for that inventory to produce that supply or that product. And then, of course, you have to pay a vendor for the respective items that you need to produce that supply or that product. It's a cycle. Without getting deep into the calculation, which the purpose of this webinar is not to make you guys experts in your operating cycle, but rather to raise some awareness. So if I could give you just kind of a key thing to depart this webinar with, think about how long it takes with your product or your service that you're delivering for it to return after you incur some expense as cash back into your business checking account. It takes time, right? Start to calculate it, start to think about how long that takes so that you can more adequately start to manage cash on hand, understanding your sales cycle or your operating cycle so that you know to a T how long that process will take, and you can make sure that you have adequate cash on hand to manage to that. Again, being mindful that the money will come back, but it might take a little bit more time than we initially envisioned for that money to come back. Again, a sale often in any business doesn't immediately generate into cash. It takes time. Having some knowledge about that can be very powerful. So cash flow problems are certainly a business breaker. Remember this, cash flow issues are an important challenge for small businesses and the leading reason that many survive, or in some cases, many close. But for most of these businesses, the problems have been built over time. And by the time they're closing down, things just simply became too big of an issue for them to be addressed. There's just not enough money any longer for these issues to be solved. So always pay attention to your business's cash flow and take action when things get tight. The earlier those warning signs are addressed, the more options you're going to have to get your business back on track. And again, we're offering some immediate solutions and then some long-term solutions that you can utilize to get out ahead of this, and so that it never becomes, as we're saying in this slide, too big a problem to resolve. Another thing that you can do too is you can always reach out to one of us at Grow America. We're mindful of this. We live and breathe it daily. I constantly and consistently am working with business owners on their cash flow needs and determining which businesses have healthy cash flow and can take on additional funding, and which businesses don't have healthy cash flow and can't take on additional funding. If you're a current Grow America client and cash flow challenges are preventing you from making regular business loan payments, think about that strategy that we just talked about. Reach out, communicate, talk to us. You might be surprised to find out what the answer will be. I can assure you, if you reach out and actively communicate your problems to us, we're going to be able to solve them for you and come up with a compromise in a way that if you don't, we really will not be able to. Again, no communication equals no solution. Let's stay in touch. This is a headshot of me and my number and my email, and I certainly look forward to hearing from you. We have a wonderful team of professionals on our lending team, a wonderful team of professionals that work within credit, closing, and in our servicing department. Here's my contact information, but certainly there's a whole team behind me. And in addition to that too, we love to leverage technology in everything we do. So you'll be able to log in, work with us, and be able to see what's going on with your loan in real time. But at the same time too, none of us are too far away. And you can always pick up the phone, give us a call, or schedule some time to speak with us. So with that being said, we've arrived at the end of the webinar, and I'll hand it back to Joe.
Thanks, Connor, for that great information. I'm not seeing any questions in the chat or in the Q&A. So if anybody has any questions, why don't you put them in real quick and we'll get to them. Otherwise, we've got another webinar session scheduled for April 24th on the topic of strengthening your business financial health. So hopefully you'll join us again. We'll continue to try to give you valuable information to improve your business. And thanks for joining today. And so do you put, got a question, Connor. Do you put personal money that you've invested in your business on the balance sheet as a loan? Good question.
I think personal money that you invest into a business would actually show up on your business balance sheet, but this gets back to why some help from an accountant as a long-term solution could be very helpful. A accountant, again, in keeping with this differentiation between business expenses and personal expenses, will adequately show what that looks like when you're giving money from the personal side to the business side. Oftentimes we see that on a balance sheet as a note subordinate or a long-term subordinate officer loan. It's almost like a form of hidden equity that you're giving to the business, because of course, if you're lending money or giving money to the business, you don't really have set terms for repayment on that the same way that a bank or that any sort of other lender might have. So it's definitely an example of where, if you want to do this the right way, reach out to your accountant. They'll show you how to do that, and they'll show you how to adequately invoice that movement of money from your personal to your business and onto your business's balance sheet. A lot of business owners do that, especially over time. If they need some funding in the business, they will have a subordinate note on their business's balance sheet. I just want to differentiate too, that if you're starting a business and you're injecting equity into the business, that might look a little different. And again, another reason to reach out to your accountant. If you're injecting money into a business, that might show up on a different part of your balance sheet when you're starting out a business. It might show up as paid in capital. And again, these little nuances and differences, you don't have to be an expert in them. This is what we kind of nerd out to here at Grow America. But certainly if you reach out to an accountant, that accountant can explain to you the what, the why, and the difference.
Thanks, Connor. I've got another question. Do you have specific tips regarding cash flow management for service-based businesses? For instance, service-based businesses can't just run sales or do other things to create cash flow the way a retail or a manufacturing business could. Any specific tips for increasing cash flow for service-based businesses or managing cash flow in general?
That's a wonderful question. I think for service-based businesses, that oftentimes service-based businesses are invoicing their clients, they're providing a service, and then they're waiting to get paid. I think of a consulting business, which is very common in the American economy today. Consulting businesses actually have great profit margins. You might be providing a tangible service or some advice to one of your clients, and then you say, hey, client, I rendered some services to you. This is my hours that I work. This is the work I did and the work product I produced for you. I need to get paid. And then you're giving them an invoice, and then you're waiting to get paid. Now, we live in a world where people don't pay you just today. I mean, sometimes we Venmo people for an immediate item or service rendered, but it's rare, unless we're running a restaurant where we go in and pay immediately for our food or the drink that we're having. When we're thinking about a service-based business, of which a restaurant is not, that can take a little bit longer to get paid. That invoice, when you give it to your client, becomes what we call a receivable. You're waiting to receive money, as the name would imply. And in a lot of businesses, that can take 10 days, maybe it takes 15 days, or oftentimes it takes 30 days, depending on the business. But the longer you're waiting on that cash to come back. If you recall, I made that point as one of our immediate strategies, that when we're thinking about receivables, you don't want to wait too long on your customer or your client to pay you back, because in essence, you're becoming their bank. You're lending your money, your cash to them for the service that you produce and the expense you incurred when you produce that service or that product. And then you're waiting on them to pay you back. So you became a lender to them. Don't become their lender, be their service provider. And in line with that, If somebody's taking past 15 days or 30 days, depending on however long your expectation of repayment was for them, call them, say, hey, please pay me. I'm looking forward to working with you again, but I need to get paid, because in some respects, internally to your mind, what you need to be thinking about is I can provide them a service. I can't provide them with lending terms. I'm a lender. That's what I do. What you all do as a business is you provide a service, and then in a meaningful period of time, you expect to get paid back.
Thanks, Connor. And speaking of being a lender, this next questioner wants to know if I'm interested in getting funding from Grow America, what should I do? Where should I reach out?
Take a screenshot of this picture right here. Well, maybe not the picture I have of my face, but more importantly of my contact information. Shoot me an email. Another thing you can do too is you can go on to our sitelet. It's growamerica.org. And we have created not only a wonderful site that describes more about all the various work that we do that Joe was referencing at the beginning of this webinar, which includes training services, technical advisory services, and more. But we have a new sitelet that we've launched that tells a little bit more about the lending work that we do. You can also read about business owners like yourself and what their experiences were here at Grow America, because of course, seeing is believing. And you can apply for a loan there too. You'll see an Inquire Now, get started, and you can easily complete a pre-application in less than 10 steps. As soon as you complete that pre-application, you're going to be queried or prompted to then start to upload some documentation, super simple documentation, business returns, just some interim financials, a personal financial statement, and a personal tax return. And then you're going to get contacted by an actual person who's going to say, hey, I looked at your business. I looked at the numbers that you sent to me. Let's talk about your business's story, and let's talk about where you've been and where you're heading, in part where you're heading if you need a loan from us.
Thank you, Connor. We had another question regarding the actual presentation, whether it be shared, and the answer is yes. I believe everybody that signed up for today's webinar will get a copy of the presentation.
That's a definite affirmative yes. I think we live in an age in which it's complicated and there's so much different things going on. But the nice thing about the age we live in is information is power, and there's plenty of information. And so we're going to share this out with y'all. Another thing to keep in mind too is if you go to our sitelet, there is a plethora of resources there. There's testimonials from other borrowers. There's a wonderful resource library on cash flow, on other topics that you should be mindful about when you're putting together a loan application or when you're working or running a business. So I would encourage you all to go to that sitelet. A lot of people give words around providing businesses with resources, but we really believe that. And I don't say this just kind of trivially. We put a lot of effort from our marketing and comms team, from myself personally, and from the business owners we work with to perfectly and really kind of beautifully curate some resources for you all. I wouldn't put my name to this unless I trusted it. So I really would take some time in there. I know there's a lot of information out there. We live in an age in which we can look at YouTube, or we can go onto LinkedIn and digest some resources. Take a shot with ours. Our resources are really thoughtful. They're well curated, and they're in approachable human terms, not complex financial terms. We don't believe in doing that. We believe in giving you, the business owner, some resources that you can understand easily, and then come back to us with some additional questions.
Great. I'm so far, no, I'm not seeing any additional questions. Let me do one more quick search. Do we do refinancing, Connor? A question just popped up.
Yeah, that is a common use of funds, and it's a common thing that we do. Why is that common? It's common because business owners oftentimes are willing to trade rate and term for speed and efficiency when it comes to capital. And we at Grow America have started to leverage technology and efficient processes to make that trade-off no longer a trade-off in rate and term. We believe you can have speed and efficiency and refi out of high rate short-term debt. We get it. Maybe you took out some debt from an online lender or the like, and you're realizing this is costing me a lot. It is too aggressive of a repayment term. Reach out to us. We're ethical, common sense lenders. We'll give you a reasonable period of time with a reasonable rate so that you can pay back the loan and not have a cash flow crunch.
Great. I think we've got time maybe for one more question. If anyone has one that you want to pop up really quick.
These are wonderful questions, by the way. These are very thoughtful questions. Sometimes when we give a webinar, we ask ourselves, did the resources really hit home? And what I can tell right now is with the questions you all are asking, that they did hit home. So that's very meaningful to us. Our comms and marketing team, along with myself and Joe, we put a lot of time and effort into this. So it means a lot to us that you guys ask such thoughtful questions.
Okay, so seeing no other, we'll wrap up and we look forward to seeing you all on April the 24th, where again, we'll have another webinar and believe it'll be at the same time, where we'll talk about managing your business financial health. Thanks for joining us today.
Thank you all.